6:47 a.m., March 19th, 2026. Naval Station Norfolk, Virginia. 14 NCIS vehicles moved in tight formation through Gate 5, headlights cutting through the gray pre-dawn. Behind them, 4 unmarked FBI SUVs. Ahead, Warehouse Complex Delta, a cluster of climate-controlled storage facilities housing engine components, classified avionics equipment, and whatever else the Navy needed to keep behind fences. Estimated street value of what investigators believed was inside those warehouses, 0. The equipment was already gone. Estimated value of what had been systematically removed over the previous 14 months, $78 million. The agents weren't here to recover stolen hardware. They were here for the people who took it. 4 months earlier, nobody was looking at Warehouse Complex Delta. Nobody was looking at the supply chain petty officers who logged equipment in and out. Nobody was running audits on the resale invoices generated by Virginia Beach defense brokers. The entire operation, methodical, layered, protected by institutional blind spots, had moved $68 million in classified Navy components out of 3 East Coast installations without triggering a single automated flag. It ended because of one woman, one invoice number, and a decision she made after her supervisor specifically told her not to make it. Her name has never been released. At her request, what federal investigators would later describe as one of the most sophisticated internal theft operations ever prosecuted within the United States Navy started and ended because of her. This is what happened between November 2025 and March 2026. Patricia Donahue had been doing federal contract compliance work for 11 years. Before that, she spent 18 years as a Navy logistics clerk. The kind of work nobody glamorizes and few people understand. Tracking parts, reconciling invoices, auditing inventory manifests, making sure that what was logged as arriving had actually arrived, and what was logged as destroyed had actually been destroyed. She was 58 years old. She worked out of a shared office in a contractor facility near the main gate. She drove a 12-year-old Honda. She had a daughter in Richmond and 2 grandchildren she visited on weekends when her schedule allowed. In early November 2025, she was assigned a routine compliance review at Naval Station Norfolk, cross-referencing destruction manifests against current inventory levels for a specific category of avionics components. A standard quarterly check. Typically took about a week. Typically produced no surprises. On the 3rd day of that review, she found a surprise. The component in question was a batch of AN/ARC series encrypted communications modules, 12 units, classified as surplus following a scheduled upgrade cycle. The destruction manifest logged them as destroyed in transit in September 2024. Standard notation. Clean paperwork. What caught Donahue's attention was a commercial resale invoice she pulled as part of a parallel document reconciliation. The invoice referenced the same serial number block as the destroyed modules. The invoice was dated October 2025, 13 months after the components had supposedly been reduced to scrap. The invoice was from a defense surplus broker in Virginia Beach. Donahue cross-checked the invoice number twice. Then she flagged it to her supervisor. Her supervisor, a civilian contract manager named Gerald Weiss, reviewed the flag the same afternoon. He told her it was likely a clerical error, probably a duplicate serial number batch logged incorrectly. He told her to note it in her report and move on. Donahue noted it in her report. She did not move on. What Donahue did next was technically outside the scope of her contract. She pulled the full invoice history for the Virginia Beach broker, a company registered under the name Tidewater Defense Solutions. She cross-referenced every document number against every destruction manifest she could access in the compliance database. She found 4 more matches, 5 invoice numbers in total, referencing components logged as destroyed between August 2023 and October 2024. That had apparently generated commercial resale activity in the 18 months following their recorded destruction. The dollar amounts were not small. The lowest was $340,000. The highest was $2, $1 million. She documented everything she found, saved it to an encrypted drive, and sent an email directly to the NCIS tip line. The email landed on the desk of Special Agent Richard Callahan at the NCIS Economic Crimes Unit in Washington on November 14th, 2025. Callahan had been with NCIS for 16 years. The last 7 focused on supply chain fraud and internal theft. He had worked cases involving falsified shipping manifests, forged destruction records, and ghost inventory schemes. He had never worked a case that opened with a civilian contractor pulling 5 matching invoice numbers from a surplus broker's commercial history and sending them to a tip line without being asked. He called Donahue directly that afternoon. "Walk me through exactly how you found this," he said. She walked him through it. He told her not to discuss it with anyone. She told him her supervisor had already asked her to drop it. Don't discuss it with anyone, Callahan repeated. Including your supervisor. Callahan brought the 5 invoices to his unit chief the following morning. The initial read was cautious. 5 invoices from one surplus broker could be a documentation error, a duplicate serial number system, a legitimate resale of components that had been incorrectly logged. The Navy's destruction documentation was known to have inconsistencies. It wasn't impossible. What was impossible was the scale of the discrepancy once investigators started pulling thread. Over the following 3 weeks, NCIS analysts working under a preliminary inquiry designation, below the threshold that would require formal notification to command, began mapping the commercial activity of Tidewater Defense Solutions. What they found shifted the case from a documentation anomaly to something considerably more serious. Tidewater Defense Solutions had been incorporated in Virginia Beach in March 2023. Its listed principal was a former Navy logistics petty officer named Marcus Delray, who had left active service in January 2023 after 12 years in supply chain roles at Naval Station Norfolk. Delray had no prior criminal record. He had received an honorable discharge. He had a business license, a bonded warehouse, and a State Department registration as a defense article broker. On paper, Tidewater was a legitimate operation. Between its incorporation in March 2023 and November 2025, Tidewater had processed $43 million in commercial transactions. The buyer records were layered through a chain of intermediaries: a freight forwarding company in Atlanta, a registered import-export entity in Delaware, and a brokerage operating out of Tallinn, Estonia. The end buyers were not identified in commercial records. I spent hours going through the case file reconstructions, and one detail kept nagging at me. The Tallinn connection showed up in the paperwork before NCIS even knew how big the theft operation was. The investigators found the Estonia link on day 22 of a preliminary inquiry. The case they thought they had, a documentation anomaly, maybe a small fraud, had already grown in international dimension before they'd filed their first formal case number. The formal investigation opened on December 3rd, 2025. By then, NCIS had been joined by the FBI's Counterintelligence Division, which had specific jurisdiction over the Tallinn brokerage connection given the classification status of the components involved. The Joint Task Force was designated under a case name that has not been made public. For the purposes of this account, it will be referred to as Operation Clearinghouse. The core investigative question was straightforward. How were classified avionics components that should have been destroyed ending up at a commercial surplus broker? The answer, as investigators would spend the next 10 weeks establishing, was both simple and systematic. The network operated through supply chain petty officers. E6 and E7 enlisted personnel whose job function included receiving, logging, and routing components through the Navy's internal logistics system. At 3 installations: Naval Station Norfolk, Naval Air Station Oceana, and Joint Base Andrews. A total of 17 active duty personnel had been recruited into a scheme that substituted salvage components for classified units at the point of destruction documentation. The mechanics were straightforward. When a classified component was scheduled for destruction, a participating petty officer would divert the actual unit before it reached the destruction facility, log a salvage-grade substitute as the item destroyed, and submit the paperwork through the normal approval chain. The classified component would then move through a chain of Navy vehicle checkpoints using forged transit authorizations. Documents that showed legitimate supply chain transfers but routed the items to a civilian pickup point outside installation perimeters. The pickup logistics were handled by 3 civilian contractors operating under legitimate defense subcontracts at the installations. Their vehicles had the access credentials to pass through gate inspections without secondary checks. On paper, they were routine parts couriers. The classified components went from pickup directly to a bonded warehouse in Suffolk, Virginia. Not Tidewater's Virginia Beach facility, but a secondary location registered under a separate entity. From Suffolk, items were repackaged with sanitized documentation and moved to Tidewater's commercial facility, where they entered the broker's inventory as surplus items of unspecified origin. From Tidewater, they went to the Tallinn brokerage. What surprises me most about this case isn't the scale, it's how long it ran without detection. 14 months, 3 installations, $68 million in classified hardware, processed through a logistics chain specifically designed to look routine at every checkpoint. The scheme didn't survive because it was clever. It survived because the auditing systems it exploited weren't designed to cross-reference commercial resale records against destruction manifests. Patricia Donahue did something the automated systems couldn't. She pulled both documents and looked at them side by side. By mid-December 2025, surveillance operations were active at all 3 installations. NCIS technical teams had placed monitoring equipment on the communications of 8 of the identified petty officers without their knowledge. FBI counterintelligence had established the commercial relationship between Tidewater Defense Solutions and the Tallinn brokerage, a company registered under the name Baltic Component Partners, and was working to identify the end buyers through Estonian financial records. The surveillance phase produced a significant volume of evidence quickly. The petty officers involved in the scheme were not particularly security conscious in their communications. They used personal phones. They discussed logistics details on messaging platforms with no encryption. They coordinated pickup schedules via text messages detailed enough to reconstruct the entire movement chain for specific components. One exchange, recovered from a December 2025 surveillance period, showed 2 petty officers at Naval Air Station Oceana discussing a batch of drone guidance modules scheduled for destruction in January. The exchange included the diversion route, the transit authorization number to be forged, and the expected payment, $47,000, split between 4 individuals. The drone guidance modules referenced in that exchange were valued by the Navy at approximately $1, $9 million. The task force documented that exchange and continued surveillance. Arresting the participants at that point would have closed a small part of the network. Investigators wanted to close all of it. Here's the part that doesn't make sense on the surface. Investigators knew by late December that they had enough evidence to arrest 17 individuals and shut down Tidewater Defense Solutions. The case was already prosecutable. The choice to extend surveillance for another 2 months, through January and February 2026, was a calculated risk. If any participant became suspicious and warned the network, the higher-level actors could disappear. That risk nearly materialized. On January 8th, 2026, Gerald Weiss, Donohue's supervisor, the contract manager who had told her to drop the invoice flag, submitted a formal complaint against Donohue to the contracting authority, alleging that she had exceeded her mandate and accessed documentation outside her authorized scope. The complaint reached NCIS before it reached the contracting authority. Investigators had already identified Weiss as a person of interest 3 weeks earlier. Financial analysis showed that Weiss had received $180,000 in payments through a consulting entity connected to one of the civilian contractor participants in the scheme. Weiss was not a logistics operative. He had no role in diverting components. His role, as investigators assessed it, was institutional cover. When anomalies arose in the contracting audit environment, Weiss was positioned to redirect or suppress them. Donohue's invoice flag had been one such anomaly. When she bypassed Weiss and went to NCIS directly, Weiss had apparently concluded that the best response was to formally discredit her rather than approach her directly, which might have constituted witness tampering, a risk he may have understood. The complaint against Donohue was referred back to investigators as evidence. Weiss remained unaware that he was under active monitoring. Unpopular opinion: Weiss's role in this operation may actually be more significant than his relatively modest payment suggests. A scheme of this scale, running across 3 installations, through legitimate procurement channels, with destruction manifest irregularities, doesn't survive 14 months without institutional protection at the auditing layer. 17 petty officers and 3 contractor drivers can't paper over that much discrepancy on their own. Weiss's $180,000 may represent only one layer of suppression. The investigation has not publicly identified any other individuals in oversight roles connected to the network. That silence is interesting. The obstacle investigators didn't anticipate came in the second week of January 2026. A surveillance team monitoring Marcus Del Rey observed him making an unscheduled visit to a storage facility in Chesapeake, Virginia, a location that hadn't appeared in any previous analysis. Technical teams moved quickly to establish coverage on the facility, but the initial placement was disrupted when a property management employee walked into the surveillance position and the team had to withdraw. The Chesapeake facility went dark for 6 days while investigators worked to re-establish coverage through alternate means. When they did, what they found in the facility's access records changed the scope of the case. The Chesapeake storage facility was registered to a company with no apparent connection to Tidewater or any of the other entities in the investigators' existing network map. Its listed operator was a woman named Sandra Holt, a veteran-owned small business owner with a defense logistics subcontract and no criminal record. She ran what appeared to be a legitimate storage and freight management service. Financial analysis of the Chesapeake facility's operational accounts, conducted over 48 hours in mid-January, revealed that Holt's company had processed $14 million in transactions between April 2024 and December 2025. The source of those transactions was a series of shell entities, some registered in Delaware, one in the Cayman Islands, with no apparent business rationale for paying a Virginia freight manager $14 million over 20 months. Holt was added to the case as a co-conspirator. The Chesapeake facility became a fourth location for the March arrest operation. What Delray was doing at that facility in early January, whether he was moving assets, checking on stored components, or meeting with Holt, was captured on surveillance equipment that teams re-established the following week. That footage became part of the evidentiary record. Its contents have not been made public. February 2026 was the final month of the surveillance phase. Task force analysts were finalizing arrest packages for 27 individuals, 17 active duty petty officers, 3 civilian contractors, Gerald Weiss, Marcus Delray, Sandra Holt, and 6 additional participants identified through financial analysis. 3 as payment intermediaries, 2 as document forgers, and 1 identified only by an alias used in monitored communications. The alias, Franco, appeared in multiple intercepted exchanges as a coordinator for the Estonia side logistics. Whether Franco was a single individual, a rotating pseudonym, or a reference to a business entity was not definitively established by the time arrest warrants were filed. The name appears in the indictment documents as an unidentified co-conspirator. The Talon brokerage, Baltic Component Partners, was identified in the indictment as a knowing buyer of stolen classified components. Estonian law enforcement was notified through Interpol channels. The end buyers, the entities that Baltic Component Partners had resold components to, were referenced in the indictment as foreign nationals whose identities remain under active investigation. Put yourself in the task force's position for a second. You have 17 people inside active military installations, handling classified hardware, coordinating with an international broker who has sold components to buyers you cannot yet identify. Every day of continued surveillance is another day that information could leak. Every week is another week that hardware is potentially reaching end users who have reason to want classified Navy communications and drone guidance systems. The choice to extend the operation through February was operationally justified. It was also, in any honest accounting, a risk that produced a better evidentiary case at the cost of additional time in which hardware was moving toward unknown buyers. Is that the right trade-off? Did the operational calculus here serve the investigation? Or did it prioritize prosecution over hardware containment? Arrest coordination for Operation Clearinghouse began in earnest in early March 2026. The operation involved personnel from NCIS, the FBI's Washington and Norfolk field offices, the Defense Criminal Investigative Service, Naval Criminal Investigative Command, and coordinating elements from the military police at all 3 installations. The logistical challenge was significant. 17 arrest targets were active duty military personnel who reported to duty stations across 3 installations in 2 states. 8 additional targets were civilians operating across Virginia. Simultaneous execution was essential. Any early arrest or public indication of the operation could trigger flight or evidence destruction. Task force planners developed a synchronized arrest matrix that assigned teams to each target based on their projected location at a specific execution time. The execution window was 6:47 a.m. on March 19th, 2026, a Thursday, a normal duty day, a time when all active duty targets could be expected to be at or en route to their duty stations. The planning process ran 17 days. Every team received target packets that included vehicle descriptions, duty station locations, residential addresses, and contingency routes. Pre-positioned staging areas were established near each installation the night before. One detail from the planning phase that nobody expected: 3 of the identified petty officers were scheduled for duty rotations during the week of March 19th that would have placed them at sea aboard vessels departing Norfolk. Task force planners discovered this during a final pre-operation review 9 days before the arrest date. The rotations required coordination with vessel command to either delay departure or modify duty assignments without alerting the targets. A process that involved 7 people at command level who had to be briefed on an active counterintelligence investigation without that information reaching anyone connected to the installation supply chain. That briefing was completed in 48 hours. None of the targets were alerted. 6:47 a.m., March 19th, 2026. At Naval Station Norfolk, the first vehicles moved through Gate 5. Special Agent Richard Callahan was in the second vehicle, monitoring radio traffic from 4 simultaneous arrest teams operating within the installation perimeter. At Naval Air Station Oceana, 43 miles northeast, a separate NCIS FBI team was executing arrests at the base housing area and 2 on-base duty stations. 3 targets were taken into custody within the first 11 minutes. At Joint Base Andrews in Maryland, 6 arrests were executed simultaneously. 2 active duty petty officers at their duty stations, 1 contractor on base for a scheduled delivery, and 3 additional individuals whose vehicles were stopped at the gate during the arrest window. At the Suffolk warehouse facility and the Chesapeake storage facility, FBI teams executed search warrants concurrently with the arrests. Marcus Del Rey was taken into custody at his Virginia Beach office at 7:02 a.m. Sandra Holt was arrested at the Chesapeake facility at 7:09 a.m. as she arrived for what appeared to be a routine morning check. Gerald Weiss was arrested at his home in Chesapeake at 6:52 a.m. He did not speak to agents before his attorney arrived 3 hours later. By 9:15 a.m., 19 active duty personnel and 8 civilian contractors had been taken into custody. 27 of the 28 primary targets were in federal custody. The 28th, one of the 6 financial intermediaries, a man identified in court documents only as operating through a Delaware entity, had left the United States 11 days earlier and had not returned. His current location has not been made public. The alias Franco. No arrest. No confirmed identity. Still listed in the indictment as an unidentified co-conspirator. Federal search warrants executed concurrently with the arrests produced approximately 4,000 pages of physical documentation, 41 digital devices, $2, $3 million in cash held in 6 locations, and component inventory at the Suffolk and Chesapeake warehouses that investigators assessed as representing approximately $11 million in classified hardware that had not yet been processed through the broker chain. The hardware recovered at Suffolk and Chesapeake represented a fraction of the total stolen. Investigators assessed that approximately $67 million in components had already been sold through Tidewater and Baltic component partners before the arrest operation. The current location of that hardware is not fully accounted for. Some of it has been traced through Estonian financial records to buyers in 2 Eastern European countries. The identities of those buyers, and whether the hardware reached its ultimate end users, are described in court documents as matters of ongoing investigation. Of the 19 active duty personnel arrested, 11 have entered guilty pleas as of mid-2026. Sentencing for those 11 is pending. The 8 remaining active duty defendants have entered not guilty pleas. Trial dates have not been set. Marcus Del Rey faces charges including conspiracy to traffic in stolen government property, trafficking in classified defense articles, and money laundering. His total exposure under the indictment is described as potentially exceeding 40 years. His attorneys have indicated he is cooperating with prosecutors. Sandra Holt faces similar charges. Her cooperation status has not been made public. Gerald Weiss faces charges of conspiracy, obstruction, and receipt of proceeds from stolen government property. His attorneys have filed a motion challenging the monitoring that produced the evidence against him. That motion is pending. One detail that stuck with me. The indictment references $14 million processed through Holt's Chesapeake facility. Del Rey's Tidewater processed $43 million. The remaining $21 million. The gap between what those 2 entities handled and the total $78 million figure isn't fully accounted for in the public indictment. Court documents reference additional distribution channels not fully identified as of the filing date. What those channels were, and whether additional participants remain unidentified, is not addressed in any public filing. The network described in the indictment may not be the complete network. One final note on Patricia Donahue. Following the March arrests, the contracting authority that employed her received a formal citation from the Department of Defense acknowledging the significance of the compliance review that initiated the investigation. The citation did not name her. It referenced the compliance review, its findings, and the NCIS referral that followed. Donahue's contract was renewed. Her scope of work was expanded. Her supervisor, Gerald Weiss's complaint against her was formally dismissed and expunged from contracting records on March 21st, 2026, 2 days after his arrest. Donahue has not given interviews. She has not been identified publicly. According to one person familiar with the case who spoke on background, she was asked by investigators whether she wanted any formal recognition for her role. Her reported response was that she had done her job. She had found an invoice number that didn't match a destruction record. That was what she was paid to do. If you want to know when the sentencing hearings begin, or whether prosecutors ever identify who was operating behind the Franco alias, subscribe. We'll cover it as it develops. There's a line in the unclassified indictment summary that reads, "The full scope of components diverted and their current disposition remains under active investigation." That's not boilerplate. That means federal agencies responsible for classified Navy hardware cannot fully account for where all of it is. Some of those components, radar modules, encrypted communication systems, drone guidance hardware, are somewhere, with someone. The arrests are done. The cases are moving through court. The hardware is still missing. Will the foreign buyers of those components ever be publicly identified? Comment why yes if you think prosecutors get there. No if you think those threads stay buried. The ring is dismantled. The $67 million in hardware that left the country before the arrests is not.